Hey, welcome back, everyone. It is time for another red hot covered call video. Well, hey, look, I'm back behind the mic, fired up because I'm going to show you 3 of my favorite stocks I'm going to use in 2022, writing covered calls, selling cash secure puts, and we're going to use them for the poor man's covered call, and yes, and using them for a covered call with dividend capture. Absolutely love using those great stocks that pay a dividend so we can collect a dividend as well as write a covered call, doubling my profits. Now, before we get there, let's talk a little bit about where we're at. It's January 2022. We start the year in a good place because the Fed has already came out. They kind of dulled everyone's nerves by saying that they're going to go ahead and raise interest rates. They also said they're going to taper a little bit. It didn't scare Wall Street too much. Historically, January, with such a huge run-up in December, has traded sideways to higher. And today, we start the stock market up some 200 points on the Dow. So we might get that nice sideways to higher trade in January. So this is a great way to kick off the new year. We're going to have a chance to really find some value plays in this market. Because I'll tell you what, some of these stocks have just beaten down, and they're going to come back to them in 2022. You could bank that. Now look, what we do here is this. We sell premium so we can put money on the table. We can plan for retirement where we can use our portfolio generating income instead of working a 9-to-5 at a big box store. We want to retire, right? We want to have that freedom, so we need a way to generate income. Selling premium is the perfect side hustle for all those that want to make a little extra money or generate real income in retirement, right? It's the second oldest trading strategy on Wall Street. So look, writing covered calls, selling cash secure puts. That's what we do here. I love to bring a little juice to all my trades to motivate and inspire you. I've been doing this for 5 years. God willing, this year, I retire from the 9-to-5. So everything I've been showing you over the past 5 years, 300 plus videos, I'm going to have to put all of that knowledge into my very own game so I can keep living the good life. Now look, with that said, if any of this interests you, I want you to subscribe to my channel. I come back every single week to show you a timely and relevant covered call trade where I put real money on the table. I try to show you what I'm doing so you get a little closer to it, right? I could read you a dry covered call book and you just won't get it. It'll confuse you. It's like learning a different language. I show you time and time again. You're going to feel comfortable with it. You're going to do it. Okay? That's what I'm really encouraging you to do. Get your financial education. Get in the game because I want you to stop watching others have success. Now, hey, look, if you like anything you hear today, I want you to bang that like button. It lets me know you like what I'm doing. Now, what I'm doing is this. I'm turning back the clock. 2021, I did a video where I was using these 3 stocks in 2021 to generate income. I went back and looked at those 3 stocks, and I'll tell you what, awesome covered call plays all year long. We talked about AbbVie, Bristol Myers, and Rocket. Those 3 stocks, I made over $20,000 in 2021 using those 3 stocks. See, I want to bring you videos talking about stocks that I use versus just hand-picking stocks and telling you about them. Okay, I use these stocks so I can speak to them. Now, we win some, we lose some, but at the end of the day, when you get in the game, you're going to use stocks you feel comfortable with. And in this case, AbbVie, Bristol Myers, and Rocket, I feel very comfortable with generating some real income, putting food on my table. Now, 2022 is not going to change. I'm going to use the same strategy, but what we're going to do is we're going to get back to our roots a little bit. 2021, I got a little loose using a lot of those under $50 stocks with huge premiums, right? A lot of IV there, and I was making money hand over fist in the first half of the year. As Wall Street started to pull those stocks back, I found myself in a spot where I could either sell take the loss, we move on. But you know what? I had pride. Little pride got in the way, and I kept them a little too long. So what I ended up doing is taking my unrealized losses and decided I'm not carrying them into 2022. We're going to start fresh, and we're going to realize some of those losses, and we're going to tax harvest. Now that's what I did. You know, when you make $104,000, man, the tax man is banging the door. I had to scratch a hella check last year. Well, I decided to tax harvest some of those, but now we have a pile of money we have to put to work. And that's where my disaster recovery spreadsheet is going to come into play. So go to my website, cptdashboard.com, free spreadsheets, download your disaster recovery spreadsheet. Watch the video as well. Talks to you about my mindset in repairing a bad portfolio when some of our trades went bad. Now, with that said, what stocks am I using in 2022? Well, let's go ahead and talk about 3 stocks that I'm using in 2022. As you know, I have a membership and I have a 1 free month offer for you. This is what I sent to the members October 4th. AbbVie. We were talking about AbbVie. All year I was using AbbVie. Absolutely love AbbVie. They have a great dividend and their stock trades in a range. On October 4th, I told them AbbVie had peeled back and they were in such a range. It was a great buy low situation. So I told them exactly what I was going to do. They had earnings. Earnings was good. Moving forward, it's time to play AbbVie. And I wrote this to the members, telling them exactly what we want to do. And sure enough, when AbbVie was trading around $109, I think it even got to $107 on October 4th, it took off. Now, I'm not going to say I had anything to do with that, but AbbVie is currently trading at $135. I'm telling you what, it's a great covered call stock you can still use today. It trades in such a range that even if it falls a little bit, Wall Street comes back to it. It is a huge pharmaceutical company that has great products that people want. Okay? It doesn't hit the radar like Moderna and Pfizer with all the pandemic talk, but they have products that people use every single day. AbbVie still a great play. Doesn't make my list this year, but I'll tell you what, with that fat dividend, you could easily buy the stock, write the cover call, collect the dividend, and double your profits like I did in 2022. Now, stock number 1 is a collection of stocks. Okay, there's 3 stocks I love to use for my keeping the lights on strategy, right? I'm going to use a great S&P type company. We're going to write that easy swinging out of the money strike where we pick up a little stock appreciation, plus we pick up a decent premium. We're able to make that sweet 3%, right? We're looking to make 3% money invested for 30 days. So there's a great selection of stocks you can do this with. Bristol Myers, Merck, Intel, Verizon, AT&T. These are big companies that Wall Street won't sell off that much, even if they sell them off. So for 2022, when I do my keeping the lights on trade, where I'm just looking to make that sweet 3%, we set it and forget it. Telling you what, I still love Bristol Myers. Now, I'll tell you what, Bristol Myers was trading in such a range. It was so bankable, it was bouncing off that Keltner channel mid the whole year. Then it didn't meet Wall Street expectation. Then the market sold off, and here we are. Bristol Myers fell all the way down to close to $50 a share. Now, I'm knee deep in Bristol Myers. I have 1,000 shares in my buy and hold portfolio. I use Bristol Myers for my poor man's covered call strategy and doubling my dividend strategy. If you've been with me, you know that I like to use long-term buy and hold stocks that I'm just keeping for the dividends. I love to write that 30 delta out of the money strike. Chances are it never gets to the strike. I keep the premium, which equals a company's quarterly dividend. I think of it as doubling my dividends. Well, Bristol Myers fell. And I'll tell you what, I told the members that, look, Bristol Myers is one that's going to come back. It's just going to come back. Granted, it didn't meet Wall Street's expectations, but it's a great mature company and you can get some decent premium. Now, it took a little bit, but sure enough, towards the end of the year, it bounced right back up above 62. I see Bristol Myers now after earnings and them increasing their dividend and buying back more shares. Wall Street loved it. The stock pops. And now I think it's going to get back in that range where it might find itself right here. If the markets go higher, you can look for Bristol Myers to trade back in this range right here that we talked about in that last video. This is what you're looking for. You buy low, and as it's moving higher, you write that covered call here. Stock peels back. You might even do a cash secure put here, and it moves back higher. You write the covered call. We do this time and time again. And using that 30 delta, chances are it's not going to get to that strike, and you'll keep your shares and you'll pocket the premium. Now, I mentioned another stock. It's Verizon. Okay, this is one of the 3 stocks I like to use for my keeping the lights on trade, making that 3% 30-day trade. It's been trending down, and of course there's reasons why. I mean, they're in a heated battle with T-Mobile and all the wireless companies that are basically giving away free data. So they don't have the pricing strength that they used to, but they pay that huge dividend. Wall Street still loves them. It trades in such a range. You can do the same strategy. You can buy the shares low, write the covered call, maybe have your shares taken away. You can do this all year. You could try to even collect the dividend, where what you do is 2 weeks before the dividend, you buy the shares, and then what you're hoping for is a rally. So Wall Street collects the dividend, and then they sell it off. Now, what you'll do then is you're putting that strike out about 2 weeks after the dividend. The stock recovers, and maybe you have your shares taken away. It's a strategy. I do it all throughout the year. I love using these types of stocks that trade in this easy swing and range, so they're bankable in that they don't move that much. Now, granted, the premium's not that much, but for some of you big ball players, you might have a lot of shares, right? You might have 1,000 shares, 2,000 shares. A little bit of premium with 2,000 shares goes a long way. Let me show you that third stock. Third stock is Intel. I own 1,000 shares of Intel, and to be honest with you, I wanted to sell it here, I wanted to sell it here, I wanted to sell it there. But I have it. It pays such a great dividend. What I do now with Intel is I use it for doubling my dividend. As it's trading in its non-earnings report months, I love writing that 30 delta out of the money strike, collecting the premium. The premium would equal a company's quarterly dividend. It's a great opportunity to just collect an extra dividend while you're holding the share. If you can do this 4 times a year, you are doubling your dividends. Okay, so Intel, Verizon, Bristol Myers, and Merck. I didn't show you Merck, but Merck is one of those stocks that trades in such a range you can buy low and then write that out of the money strike. Chances are, as it moves in its range, right? The Keltner channel is a stocks trading range. You may have your shares taken away. That's a double win, and you move on. Love using these kind of stocks for my keeping the lights on covered call 30-day trades. All right, so stock number 2 is going to be 3M. I used to trade 3M a lot and made a lot of money because I'll tell you what, 3M is perfect for the covered call dividend capture strategy. Look, 3M is a global bellwether when it comes to global sales, right? They have so many products and they sell them globally. They're going to have profits, right? So Wall Street loves them. They pay that fat $1.48 dividend. I love using them for the covered call plus dividend capture strategy. What I like to do, 2 weeks before, 2 weeks after, we write a covered call. 2 weeks before the X date, because Wall Street starts to buy the stock to collect that $1.48. Then they sell it off after people collect the dividend, right? They're the shareholders on record. They collect the dividend. They move on. Well, that extra 2 weeks allows the stock to recover. You could see it right there. It trades sideways, falls, but then it starts to recover. Chances are, if you're lucky, the stock recovers and they take your shares higher. So not only did you collect the $1.48 dividend, you probably collected a nice $2.50 covered call premium. And for me, those are the kind of trades that I want to do with great companies like 3M. Now, 3M has peeled off recently. Earnings was an issue. And you could see here with this high volume here, Wall Street didn't like what they had to say. But you know what? At the end of the day, all of these stocks are priced for perfection. Well, it has gotten back on its horse and it's starting to trade like it did before. And what I'm guessing is this: if we get a 2022 where Wall Street isn't a bit shaky with the Fed raising interest rates and cutting tapering, a company like 3M is going to trade in that range where we can trade it all year. We buy low, we sell high. We do cash secure puts. I tell you what, 3M is going to be one of my staple trades for 2022. And I already have a poor man's covered call on 3M, and I'll tell you what, it's already profitable. So look for 3M in 2022, because look, its near to long-term low is about 166. Forget the pandemic. 166 from where it's trading now. That's a mere 5.6% from its low. So when you think about its high of 203, this thing has running room. And because it pays such a large dividend, and because it's such a bellwether, Wall Street always comes back to it. The proof is in the pudding. They sell it off here, and they came right back to it here. Just have to have patience. Get to know these kind of stocks, and you'll have no fear. Now, my third stock is a class of stocks. I'm going to use the 3X leveraged ETF to really spice up our gains. But here's the deal. I'm going to use TNA this year. Last year, I used UPRO and UDOW. Well, I'm looking at TNA, and TNA seems to trade in this very bankable range with some great support lines. TNA is the small cap Russell 2000. Small business, right? Small business has been crushed around the globe. So if there's going to be any sort of growth, it's going to be in small business as they come back online and they start selling products. Well, if you're going to invest in 3X leveraged ETFs, you want to use an index. You'll want to use an index because the index is moving. That's why I used UPRO, I used UDOW, because we're using the S&P 3X. We're using the Dow 3X. Well, here we're using the small cap bullish Russell 2000 index. I sent the members this email. Do you remember when I mentioned about this in the video? When I said we have volatility, right? The Fed had not come out. Inflation was off the chart, going higher, right? Nobody seems to be doing anything about it. Wall Street started selling. Volatility's back. I told you and the members, we look at these as opportunities, right? We don't turn our heads. We really try to use volatility to our advantage. Well, I told you that TNA was a great opportunity, and I even showed the members how it traded. Let's go to the chart now. I'm going to show you where TNA is. We're going to talk about using a leveraged ETF in 2022. Now look, the members get this stuff all the time. Whether they take the trade or not, they're getting this great information. Look, at the end of the day, I give you one free month. Go get it. Join us for 2022 because I give you like 2 emails a day plus all of my trades. You see my real-time trades as I enter them and when I close them. I give you the commentary behind it all. I'll tell you what, my membership is absolutely one that I would pay for, and that's why I give the members all that I do. 1 free month offer, go get it. Now, let's look at this. TNA. Absolutely love how TNA just trades in this range. Of course, the pandemic crushed it because small business was locked down. This is a 3X leveraged, meaning when the Russell 2000 small index moves higher, this stock will move 3 times higher. Now, you got to understand volatility. This thing will be up 10 points. It'll be down 10 points based on where the market's at. But if you think of it in terms of it just being a stock that trades and you look at that trading range, I mean, look, that's almost beautiful. You could write cash secure puts everywhere here and just make money all day long. People tell me they use TNA weekly, knocking down $2 and $3 for a weekly cash secure put. Yeah, I know, when the volatility is absolutely jacked, you can make some $2 to $3. But with TNA, you could also buy the shares down here, and as it rolls higher, you could do the 30-day at the money, and you can collect some $8 to $9 in premium. Let your shares be taken away, and this thing comes back. And then you play the game. Do the cash secure put, then write the covered call. You really can do all kinds of different strategies with these 3X leveraged ETFs. But you know what? If you go to YouTube, you'll see all these videos scaring you. Don't play them. I'm going to tell you what right now. I have made over $30,000 using leveraged ETFs. I showed a video where I did the spreadsheet. Ever since I've been using these stocks, the premiums are off the chart. If you learn this, you can make great entry points and you can sell premium. I'll tell you, it is something that I'm going to be doing in 2022. Look for TNA. The reason I'm picking TNA is because I truly believe if we're going to come out of this pandemic, TNA will benefit more than the others, only because it has the most to grow, right? All those small businesses are going to kick it in gear as we move from today into the future. It wouldn't surprise me if TNA finds itself over 100 this year, if the markets don't sell off this year. Look, I got one free month for you. Now I'm going to do a 3 favorite cash secure put trades that I'm doing in 2022 in my next video. Now, I also have my year-end result video. I think you want to watch that. I made over $104,000. I put it on the table. My wife saw the money, but I had unrealized losses in some of my favorite stocks. They just got beat down, and I got FOMO. Fear of missing out. Did not want to write a covered call, then have my shares taken away. But you know what we did? We went ahead and did a little tax harvesting. We went ahead and sold those positions, and we are now ready in 2022. I am going to battle back. I'm going to show the world that my 5 years doing this has paid off, and you're going to find that we're going to be smart yet aggressive, and we're going to make that money back. Now, I don't know if we get it all back this year, but I'll tell you what, we're going to try, because here we don't sit around, we don't turn our head. The bills do not stop. Okay, the bills don't stop, so we can't either. I'm going to hold my hand out, and if you elect to take it by subscribing to the channel, and of course, banging that like button, I'll come back every single week, show you those trades. We'll talk about it, so maybe you learn something. Hey, look, tell me your favorite stocks down in the comments. I want to hear it. I want to hear your favorite 3 stocks. I absolutely love learning from all of you as well. Hey, look, 1 free month offer. Go get it. I want to welcome you aboard to the membership. Be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.